Realty Income Corporation, ticker symbol O, is one of the most established and respected real estate investment trusts in the world. It is famously known as the Monthly Dividend Company because it pays dividends to shareholders every single month rather than quarterly like most other companies. Founded in 1969 and headquartered in San Diego, California, Realty Income has become a cornerstone for income investors seeking stable cash flow. Its strategy focuses on owning single-tenant commercial properties under long-term net lease agreements. In these leases, the tenants are responsible for property taxes, insurance, and maintenance. This setup means Realty Income earns predictable rent income with minimal operating expenses, creating dependable and recurring cash flow. The company's portfolio spans across the United States and parts of Europe with more than 13,000 properties. Its tenants are generally large and financially stable corporations such as Walgreens, Dollar General, 7-Eleven, Walmart, and FedEx. These companies provide essential goods and services that remain in demand even during recessions. This necessity-driven tenant base gives Realty Income a defensive advantage compared to other REITs focused on luxury or discretionary retail. Over time, the company has proven its resilience through multiple economic cycles by maintaining high occupancy rates and steady dividend payments. Realty Income continues to expand through acquisitions and mergers. One of its most recent major moves was the acquisition of Spirit Realty, which increased its property count and improved tenant diversification. These growth strategies help the company maintain a consistent stream of rental income and reduce risk exposure to any single industry. The scale of its portfolio also gives it leverage in negotiating better financing rates and property terms. The biggest attraction of Realty Income is its dividend history. It has paid over 600 consecutive monthly dividends and increased the payout more than 100 times since being listed on the New York Stock Exchange. The current dividend yield typically falls between 4 and 6% depending on interest rates and share price levels. The company funds these payments through strong funds from operations, also known as FFO, which measures cash earnings for real estate investment trusts. This reliable cash generation allows Realty Income to both pay and grow its dividends while acquiring new properties. Financially, Realty Income has maintained a conservative balance sheet. Its use of long-term fixed-rate debt and disciplined capital management have helped it stay stable even in high-rate environments. The company's occupancy rate consistently hovers near 99%, showing the strength of its tenant relationships. Because of its size and reputation, Realty Income can raise capital more cheaply than smaller REITs, which helps protect margins. However, there are several risks investors must understand. The most significant is sensitivity to interest rates. When rates rise, borrowing becomes more expensive, and REIT valuations often fall because income-focused investors shift toward bonds. High rates also reduce the value of properties and can slow acquisition growth. Tenant risk also exists if a major tenant defaults or closes locations. Although Realty Income's tenant base is diversified, any downturn in consumer spending can still have an impact on retail tenants. Inflation can also present a challenge because property maintenance and construction costs can rise faster than rental growth. If this happens, profit margins can tighten. Furthermore, as a large and mature company, Realty Income's growth potential is slower than smaller REITs that can target niche opportunities. It trades more like a bond substitute than a high-growth stock, so its returns rely primarily on dividends rather than big capital gains. Despite those risks, Realty Income remains one of the safest and most dependable income investments in the market. The company's scale, disciplined management, and proven history of paying monthly dividends make it a core holding for dividend investors. Even during economic downturns, Realty Income has maintained high occupancy and steady cash flow because of its focus on essential retail tenants. Its conservative approach to debt and acquisitions has allowed it to weather multiple market cycles with minimal disruption. My meter rating is as follows. Income potential 7 out of 10 due to its consistent and reliable monthly dividend. Risk 4 out of 10 because of its strong tenant base and stable cash flow. Sustainability 6 out of 10 because its model has worked for more than 5 decades. Growth 5 out of 10 since expansion is slow but steady. Overall, my meter rating is 6 out of 10. Realty Income is a cornerstone for investors seeking dependable monthly income, moderate yield, and long-term stability.